Good morning, everyone. This is Paul Duncan with GammaEdge. Today is Friday, the 25th of February. Let's get right into it. So we've thrown up a yellow caution light. This is a change from the red light that we had yesterday. Could be stabilizing. You'll see that in a second. Make sure you read Taylor's market view in the GammaEdge Discord under market status. From a short-term perspective, you may want to get your shopping list ready. Look at the gamma up and change up scans that we've placed into the GammaEdge scan channel in the Discord. For short positions, you may want to watch for a bounce and reversal downward. We're not convinced that this has a significant amount of legs to the upside yet. Medium term, still have terrible breadth. Long term, still bearish. The ES has been showing some strength. The entire complex is shifting down, in context of the zeros, which means puts are being added. The transitions coming down can go either way, but both of those are shifting down also, indicating, of course, that calls and puts are being added depending on where they are. The nice thing here is that the lower side of the complex, the minus gamma exposure and the put open interest levels remain stable at 4,200 and 4,000. So we're fairly confident that the bottom is intact, at least as far as the ES is concerned. The VIX is elevated pre-market around 29, very news sensitive, of course, because Russia, Ukraine, etc. We think it's too late to short the VIX with any size. You can play intraday, of course, but multiple day swing on the VIX is probably gone if you missed it yesterday. The SPX, still very, very net negative gamma regime. We see very little in the form of in-the-money monetization potential today. What this means is we're right at the fulcrum of the teeter-totter, and we could actually go in either direction. We think the 0 DTE today will play a role. Net expiry today, as you'll see, is a positive gamma. That means calls get monetized, and when calls get monetized, we tend to have a bias downward. So be aware of that. The market status, are we in for a reversal? Do we want to short the bounce? Do we want to enter high relative strength longs? Your guess is as good as mine. I will say this is day one of a reversal or a potential reversal, so it's something to be aware of. Terrible breadth here at circle one. We did see what we would believe to be institutional buying on the filtered cumulative tick here at circle two. We've had multiple days down. If this is your first time viewing the video, we've been telling everyone get out, play the downside. And yesterday we saw a potential reversal here off of circle 3 into circle 4. This overlaid with the SPX. Circle 5 shows us we've been in a historical downtrend and we're remaining there. Basically, the moving averages are all downward sloping and they're parallel divergent. So that is a bearish signature. The ES, as I said, relatively stable on the bottom side. The magenta line here is negative gamma exposure, still remains at 42. Put open interest is unchanged at 4,000. GEX, positive gamma exposures at 4,400, and you can see price action where we are right here. And the zeros are still, they're moving down. They're not exactly where we would think they would want to be here. Just be aware that we could push up towards 44. We could also push down to 42. And those really are the goalposts that we're looking at for today. When we look at the vol, which is the VVIX and the VIX, yesterday was the play. When the VVIX is up above the 2.3 standard deviation, that's typically an area you want to pay attention to. Doesn't stay there too long. It can, you can see back here history-wise. So you don't go all in, of course, but typically when it gets above those levels, it can pull down. Since we're back down here at 128 in the VVIX, probably too late to do anything with volatility, but take a look at that. I would be very, very careful about shorting the VIX at this point. We're now within one standard deviation, and we could pull back, or we could just kind of be range bound. It's hard to tell now. When we take a look at the PM settled and the AM plus PM, the combo, a couple things to be aware of here. At Circle 1, we do have increased volatility in the expected move today. This is higher than it was yesterday, which is somewhat significant. We do have, we think, really strong support at 4,200 in both the PM settled and the combo complex. As you can see, 4,200 has got some fairly significant hedging structure there. It is minus gamma exposure dominance for both the PM and the AM settled complexes. The box indicates the expected move, a potential of the expected move. And remember, we have at 45.10, we've got these long puts sitting up here at Circle 4. We do think there is a potential to push higher. Just be aware of that, and the details over here on the left. From an expiration perspective, net positive expiring today. Typically, that manifests itself as some downward pressure. We want to be careful of that. Whereas Monday looks like we still have quite a bit coming off at the end of the month, and could potentially fuel a rally next week. On the 0 DTE, positive gamma exposure here shown at Circle 1, very weak level though. We're right at the fulcrum. Pretty well defined gamma structure expiring today. Downside targets 4,200. If we get below that into the close, we could push lower. On the upside, 43.25 is the upside target. If we get above that into the close, we could push higher. I do expect that we'll stay within this range today, and it would not be a surprise at all if we pinned somewhere in the 42.45, 42.50 range. Finally, when we take a look at the SPX, as I said at the open, negative gamma, very, very strong level here. We've dug a pretty deep hole, and I think everybody needs to be aware of that. The key dominant levels are shown here at circles 3, 4, and 5. The yellow line is where this was evaluated. Above 4,300, it's very weak gamma. There's not a lot up here, and so there's not a lot driving us. And any monetization, these are all out of ITM here, or out of the money now, out of being in the money. And so the monetization actually occurred yesterday. So that pushed us up, and now we're kind of in this area where we're going to whip back and forth. I think it's a dangerous area because depending on what people's sentiment is into the weekend, if we see puts being opened into the weekend for downside protection, headline risk, whatever the case, that could certainly pull us down. And if we get pulled down much below 4,200, we could actually start accelerating downward also. I will highlight that the delta levels are really significant here. So dealer reaction as we go through each of these prices is pretty significant. You can see some areas where we actually have safe haven. Would not be at all surprised if we hit into these areas into the close. We'll just have to take a look at it. So good luck, everyone. Thanks for your time today. You can reach us here at www.gammaedge.us. I will take you to a sign-up page to our Discord. 14-day free trial, no risk to you. Got a great group, very active voice channel and calls out, and just it's really, really supportive. Really like what everyone's doing there. You can also reach us at GammaEdges with an S on Twitter. Thanks, everyone. Make it a great day and make it a great weekend. Thanks.